Next, we have Kate Freshy, who is an HR manager at Amazon. She will be doing an e-interview for us, and she will be discussing the power structure and techniques of Amazon and how those influence the organization.
Hi, I'm Kate Freshy, and I'm an HR manager at Amazon, and I'm going to be talking about Jeff Bezos' use of power and politics that are present in Amazon. So the specific power bases that Jeff Bezos uses are expert and legitimate. His expert power is most obviously seen when he's in a conference room giving a presentation, or somebody else is giving a presentation and he chimes in or interrupts with specific information or questions about what's being discussed, and is always correct whether or not he's specifically versed or not. But just in terms of the founding and progression of Amazon, he is definitely an expert in what's worked so far, and through this he's gained a lot of knowledge in different aspects of the company. So everyone in the company, and especially in the top management, they definitely trust his expertise, which leads into his use of legitimate power. Everybody in the organization really strongly believes that he fits in that role and deserves to be there. So as a result, there's a mutual agreement between Jeff and the employees at Amazon that he is in a position of power. He doesn't often use reward power because he believes that you earn different rewards through your participation in discussion and trying to innovate. And the rewards is just basically earning respect in the company. So he doesn't really give that out. It's just earned in a general consensus with the other employees. And he also doesn't really use coercive power because he doesn't really punish anybody or verbally threaten anyone. It's just his personality is kind of there as a threat, because everybody knows that he's not going to put up with anything. Like, if you send him this long email with an issue or anything and he doesn't get it, or just doesn't have time to sit and read through all the details, he'll just email you back with a question mark and expect you to be okay with that. And he doesn't exactly display referent power either because of his personality. People don't necessarily aspire to be like him, and he's not very charismatic, so he doesn't exactly display that at all. Because of Jeff's autocratic leadership style, really the only influence tactic that he uses and encourages his employees to use is rational persuasion. This is because he really encourages the use of facts and rational analysis to support any opinions or ideas. This way, he knows that you've thought the idea through, you have sound reasoning to support what you're pitching to him, and that you've exhausted all knowledge resources and everything. So if he was to choose your proposition, there would be you would know how to go about doing it, and he would know that it would make sense from the get-go because you've thought it through all the way out. His use of power is effective in the sense that the way that he uses it is as a motivator. So his use of autocratic leadership, it really is mainly as a motivator. It's not that he really just doesn't really like or appreciate his employees. He really depends strongly on those that work in the DC that, may not exactly be considered, senior management, but, the ones that are really doing the hard work. He really appreciates the amount of work that they do, but his leadership style is there, and he uses it, and he uses his power, his expert power and legitimate power, to motivate people to constantly be innovating, to constantly be throwing out ideas, to really have a say in the organization. So, and by using the rational persuasion influence tactic, it really motivates people to use their intelligence and to really back things up, as opposed to just throwing things out there and like, oh, this would be a really good idea, but it's not realistic. He wants to spend his time getting ideas from employees that are going to be realistic and well thought out, as opposed to spending and wasting time on ideas that just won't work and just he doesn't want to waste any additional time that he may need to like a time that isn't spent innovating is just not time well spent for him. So his use of power is effective in terms of motivation, but in terms of employee happiness and empowerment, it's not really conducive because the employees may feel that he's not really valuing them as another business leader would, for example. Because of his autocratic leadership style and the real authority that he has over decision making as opposed to, having a collaborative working environment, and the real lack in belief in social cohesion and just such an emphasis on creative conflict, it really is a breeding ground for politics within the organization, which for Amazon it works really well, but for other organizations it may not. As a result of politics being really present in Amazon and being encouraged as a result of Jeff Bezos' personality and leadership style, power tactics are definitely present in the organization. However, the most present one and the one that's most encouraged by Jeff Bezos is, again, rational persuasion, because he really wants his employees to speak up and throw out their ideas, but he wants them to be really rational and give the factual evidence that may not be present in pressure or coalitions, because he is more focused on the production aspect of things. He just wants quick information and innovative ideas fast, as opposed to focusing on more the relationship aspect, which is why he really doesn't encourage exchange or ingratiation.
Lastly, we have Thomas Zutek, who is the current CFO of Amazon, and he's going to talk to us a little bit more about the financial performance of the company. So Thomas, what financial criteria do you think is most important to examine in Amazon's performance over the last few years?
All right. So for one, there are different types of financial criteria that we can use, but I decided to use the stock price and the income statement. When it comes to stock price indicates the overall strength of and health of a company. So the basics, the higher the stock price, the better the company's doing. So if the stock price rises, the company's doing well. If the stock price falls, the company isn't doing so well, or something's going on behind the scenes. Um, Managers, usually our managers like get hired because that's a sign that they're doing good. So like managers are doing a very good job, and so it can come into some ethical situations and where like managers reduce stuff the short term to just boost the company's stock price. But in Amazon, we don't do that, which I'll explain a little more later. And also, the stock price is important because it prevents hostile takeovers. The higher the stock price, nobody's going to want to pay that much for your stock. So here at Amazon, we do believe that rising stock prices is definitely a key to success. And as you will see later, we try to increase our overall stock price. And the next thing I want to talk about is the income statement. Income statement, it uses revenues, which is pretty much our total sales, as an investor signal, and it also has the expenses of a company, and it shows the profits of a company. And so by looking at the income statement, you can see what the company made, what the company spent, and the profit of the company, and you can use that to analyze whether you should invest in the company or don't invest in the company, or you can also use that to see what type of strategies the company is also using.
Thomas, can you explain to us a little bit more about the stock price over the last 5 years and how that relates to Amazon's performance?
All right, so when it comes to stock price, we're going to look at two things. We're going to look at the range, which is the 2010 to the 2015 range. Just a little recap, the stock price indicates the overall strength and health of a company. And so at Amazon, we obviously want our stock price to be as high as possible to increase the maximum amount of earnings that the company and our shareholders will make. As you can see in 2010, we had stock prices of about $100. And since then, we have increased it to almost $400 a share. As you can see, back in around 2014, we had increased it to pretty much $400 a share. So that means that Amazon has had a huge growth from $100 to $400 a share from 2010 to 2015. Back when we first started, when we were just a couple dollars per share, to 2010, we were almost $100 per share, and in 2015, we were almost $400 per share. So you can see that right here from this point that Amazon has definitely grown as a company and that the financial performance is definitely excelling.
So Thomas, can you explain the income statement and how that relates to Amazon's performance over the last few years?
All right, so look, when looking at the income statement, again, we are looking at the company's revenue, which is its sales, its expenses, and then its profits. So as you can see in December 31st, 2012, at the end of the year, Amazon had a total revenue of over $61 million. And as you can see through this 2013 and 2014, those revenues only increased over 74 million in 2013 into over almost 89 million in 2014. So you can see that Amazon is generating more and more sales and showing no signs of stopping. And we are definitely making money. But another thing to take into account is the expenses that the company is having. And as you can see, each year our expenses are increasing. And so if you look at the total net income, in 2012, we actually had a loss of $39,000. In 2013, we had a profit of $274,000. But then again, back in 2014, we had a loss of $241 million. But this is definitely like investors will look at this and say, what's going on, Amazon? Why is the company losing so much money? The company's going downhill. But this is not the situation at all, although income statements can also be is a good indicator of how the company is doing, but it also could be deceiving because if you look at Amazon's internal strategy, we are using something called short-term profit loss. And so pretty much what that means is that since Amazon is constantly innovating, we are not afraid to spend money to secure our future. And so we're worried about our stock in the future. We're not worried about our stock in the short term. We want to increase it for the future to have a long and healthy relationship for our financial strength. And so the short-term profit loss is pretty much we spend money now and innovate right now, and then in the long term it's just going to pay off because we're still going to be ahead of the market in terms of innovation, the services we provide. And so the income statement is still a fairly good way to analyze our company's financial strength. But the thing is, Amazon is not afraid to get our shoes dirty and spend money for a better future.
So Thomas, how does the financial performance relate to what you know about Jeff?
Okay, well, first of all, again, about Jeff, he's a very direct leader. It's pretty much kind of like what he says goes, and although he does take other people's opinions into consideration, he does have the overall judgment on it. But as you can see from our financial strength, the customers come first, and Jeff strongly believes in that the customers come first. If you look at our income statement, you can see that the revenues increase every single year. So that means that more and more people are buying from Amazon and buying more often. We're also gaining new customers each and every day. And so, we must be doing something right with the customer. So Jeff really believes that customers are the sole part of Amazon. Also, another thing to mention is constant innovation. Jeff wants to be the best, and so we constantly have to innovate and stay ahead of the game. We have to be the best. We are definitely at war in that competition, and as you can see that in our also in our income statement, we use a short-term profit loss system in which we use more money on innovation, so we spend more money on innovation, so our profits are definitely not going to be good right now, but in the long term we're going to have a healthier company, a stronger company in ways that our customers, again, that customers will be more happy with us. And also, last thing to notice is that Jeff goes with his gut feeling. So like with this new things, like with the drones, Jeff, we think it's a really good idea, and so we're going, and that's another thing with innovation and for customers to